Should you hold your crypto in an LLC or just your personal account, and does it actually matter? Spoiler, the IRS thinks it matters a whole lot, and getting this wrong could cost you more than a bad trade ever would. Here's the thing, most people set up their wallets the same way they set up their Netflix account. Quickly, carelessly, and without reading a single word of the terms. But the entity you choose to hold your crypto isn't just a legal formality, it's a tax strategy, a liability shield, and potentially a very expensive mistake, all wrapped into one decision. Let's set the stage. When you hold crypto personally, every single taxable event, every swap, every sale, every time you pay for a coffee with Bitcoin flows directly onto your personal tax return. You're exposed at your individual income tax rate, which in the top bracket sits at 37% federal. And that's before your state takes its cut. Now enter the LLC, the financial world's equivalent of wearing a suit to a job interview. It doesn't guarantee success, but it signals you're serious. An LLC can provide a legal separation between you and your assets. Meaning if someone sues you, they're suing the entity, not the person who still has a mortgage and a car payment. But here's where the plot twist lives. A single member LLC is what the IRS calls a disregarded entity, which is just fancy tax language for we're gonna tax you exactly the same as if the LLC didn't exist. You went through all the trouble of filing paperwork and paying state fees, and Uncle Sam just shrugged. Now, a multi-member LLC taxed as a partnership, that's a different animal entirely, and one that actually has teeth. You get pass-through taxation, potential deductions for business expenses like software, hardware, and transaction fees, and a structure that investors and lenders actually respect. The real irony is that people rush to form LLCs thinking it's a tax hack, when in reality, the tax treatment depends entirely on how the LLC is classified. An LLC taxed as an S-corp can even allow you to pay yourself a reasonable salary and potentially reduce self-employment taxes, but only if you're generating meaningful income from crypto-related activity, not just hodling and praying. Let's talk about the misconceptions, because they are everywhere and they are expensive. People think forming an LLC automatically protects all their crypto. It doesn't, especially if you commingle personal and business funds, which courts call piercing the corporate veil, and it essentially voids your protection. From a liability standpoint, holding crypto in an LLC does create a real legal buffer. If structured and maintained correctly, separate bank accounts, formal operating agreements, no mixing personal expenses with entity expenses. Think of it like a firewall. It only works if you actually maintain it. On the practical side, here's what the data and experienced crypto tax attorneys will tell you. If you're an active trader, a miner, or running a crypto business, an LLC or formal entity structure starts making serious sense. But if you're a passive investor who buys and holds the overhead annual state fees, registered agent costs, separate accounting may outweigh the benefit. There's also a record-keeping dimension that most people wildly underestimate. Every transaction inside an LLC still needs to be tracked, reported, and reconciled, and the IRS has made it crystal clear that crypto is property, not currency. So capital gains rules apply whether you're an individual or an entity. The difference is in the deductions, the structure, and the legal insulation, not in escaping the taxman altogether. The disciplined move here is not to chase the entity structure that sounds the coolest, but to match your structure to your actual activity level, income, and risk exposure. Talk to a crypto-savvy CPA before you file anything. Set up your entity before you start trading inside it, and treat your record keeping like your portfolio depends on it, because it does. Here's the philosophical truth that experienced investors already know. The entity you choose is less important than the discipline with which you operate inside it. Consistency, clean books, and a rational strategy will protect you far more than any filing with your Secretary of State ever could. Whether crypto runs to new highs or spends another 2 years in a bear market, your legal and tax structure should be built to survive both scenarios, because the worst time to figure out your entity strategy is during an audit or a lawsuit. Prepare for the range of outcomes, not just the optimistic one. And if you're ready to take the next step, whether that's real estate investing, home contracting work, or finding the right lenders to fund your next move, check out our links in the description below.